Okay, let's get right into it. What we're seeing right now is a massive showdown between raw political ambition and the independence of the world's most powerful central bank. And believe me, it is kicking off a gold rush for the modern age. So let's break down how this epic clash is shaking up the entire global economy.
So it's the big question on everyone's mind, right? Why is gold suddenly the hottest ticket in town? Well, this frenzy we're seeing in the gold market, it's not random. Not at all. It's a direct response to a very specific, high stakes battle happening in Washington. And to get a sense of just how big this is, look at that number. The price of gold has skyrocketed by more than 50% in less than a year. I mean, we haven't seen a jump this huge in almost half a century. Gold is at an all-time high, and the reason? Well, that's the heart of our story today.
Right at the center of this economic earthquake, you've got two main players, President Donald Trump and the chairman of the Federal Reserve, Jerome Powell. And their completely different ideas about how the U.S. economy should run, well, it's put them on a collision course. And here's where they fundamentally disagree. President Trump, he wants the Fed to slash interest rates, to really juice the economy, especially with his trade wars going on. But Chairman Powell, he's pushing back, saying, no, the Fed has to stay independent. We make our calls based on the economic data, not because of political pressure. And this pressure, it got personal and it got public. This wasn't some quiet debate behind closed doors. When a sitting president starts openly attacking the head of the Fed like this, you know the game has changed. It shows he's willing to toss aside decades of political norms to get his way.
But it didn't just stop with a war of words. Oh no. It escalated fast into direct actions that threatened the entire structure of the Federal Reserve itself.
This is where it got really, really serious. A direct shot at the Fed's independence. So back in August, Fed Governor Lisa Cook voted to keep interest rates steady. President Trump's response? He tried to fire her. Just like that. She sued, the whole thing went to the courts, and by October, they blocked the move. But you know what? The damage was already done. The message was sent loud and clear: if you defy the president, your job could be next.
And this move, it absolutely terrified investors. And why? Because it lit up their single biggest fear, that the Federal Reserve, the very bedrock of the U.S. economy, was about to become just another political toy.
So let's be super clear about what this actually means. An independent central bank is supposed to be like a neutral referee, someone everyone trusts to call the game fairly. But a politicized one? That's like the ref suddenly playing for the home team. Investors started to worry that if the Fed gives in to political pressure, it could open the floodgates to out-of-control inflation and just shatter all market confidence.
So this is really the core of all that anxiety you're seeing in the markets. If the Fed loses its credibility, everything starts to wobble. The value of U.S. bonds could tank, inflation could spiral, and economic policy would become a total guessing game. And if there's one thing investors hate, it's uncertainty. And this was uncertainty on a whole new level. So what do you do when you start losing faith in the whole system? You run for cover. And for thousands of years, the ultimate financial safe house has always been gold. Why? Because it's a real physical asset. There's only so much of it, and most importantly, politicians can't just print more of it. And that's why we're seeing this huge, coordinated escape into the yellow metal. And the sheer size of this stampede is just staggering. In just 4 weeks, investors shoveled a net $13.6 billion into funds that are backed by physical gold. That's not a trickle, my friends. That is a flood of money looking for a safe place to hide.
And to put this all into perspective, the amount of gold being held right now in investment funds is getting incredibly close to the peak panic levels we saw during the global COVID crisis. That's just how seriously the market is taking this threat to the Fed's independence. And this isn't just some flash in the pan panic. This clash between Trump and the Fed is forcing a major rethink of basic investment strategy. It could literally change how we all manage our money for years to come.
Just look at this. A major bank like Morgan Stanley is now recommending a pretty radical departure from the classic 60-40 portfolio of stocks and bonds. They're telling investors to put a full 20% of their money into gold as a core part of their portfolio to defend against inflation and political shocks.
And let me tell you, that 20% recommendation is huge. Just think about it. Right now, the average fund manager holds less than 2% of their portfolio in gold. If even a small fraction of the market follows this new advice, we could be talking about trillions of new dollars all chasing a very limited supply of gold.
And get this, it's not just regular investors. The central banks of countries all over the world are doing the exact same thing.
They are buying up gold at a historic rate. It's actually surpassed the euro to become the second largest asset held in global reserves. When the biggest financial players on the planet all start making the same move, you know a fundamental shift is happening. So, all of this leaves us with one really crucial question. As politicians ramp up the pressure on our core economic institutions, the market is placing its bets on gold. And sure, it's a powerful shield, but it's also a massive vote of no confidence. And it forces us all to ask, what's the real cost of this conflict? And in the end, who is it that really pays the price?